A very good morning, everyone. In today's section, we're going to talk in details about admission of a partner. So let's know what are the things that we have to prepare under this chapter, especially. At first, we might have to determine the new ratio or sacrificing ratio. Sometimes the questions might give this, but in case the questions ask you to determine, then you have to go through the calculation of new ratio, either sacrificing ratio. And the next one is we have to pass the journal entries about the topic. Next one is we have to prepare various types of ledgers account, that is like as revaluation account, partners capital account, the balance sheet, and even cash book sometimes. But cash book is not mostly asked in the board papers. So let's proceed. What are the main entries that are need to be passed over the topic? At first, we have to pass the entry for the treatment of new partner's capital and his share of goodwill that is brought in form of cash or check. So when new partner brings his capital and his share of goodwill in cash, then we have to debit cash or bank account and we have to credit the new partner's capital account as well as premium for goodwill account. So the amount that is brought in form as a premium for goodwill, that is to be transferred. So when premium for goodwill is transferred, then we have to debit premium for goodwill and we have to credit sacrificing partner's capital or current account. And be clear, PFG is transferred always in sacrificing ratio. I use term PFG for premium for goodwill, but while writing, just write premium for goodwill, don't use the short form as PFG. So this should be transferred among sacrificing partners in sacrificing ratio. In third, partner might withdraw the share of goodwill that is credited, that is PFG, which is credited already. So in case in case the partner withdraws their share of goodwill which was earlier credited, so that is known as premium for goodwill withdrawn. So when premium for goodwill is withdrawn by partners, then respective partners' capital or current accounts should be debited and cash or bank should be credited. I have written here both current as well as capital, because in case capital is fixed, then use current. In case capital is fluctuating, then use capital. Okay. So next entry is when new partner is unable to bring his share of goodwill in cash. In case the new partner is unable to bring his share of goodwill in cash or check, then we have to debit his current account. Means respective partner's current account will be debited with his share of goodwill, and sacrificing partner's capital or current account should be credited. And this is also in sacrificing ratio. So the entry will be new partner's current account debit to sacrificing partner's capital or current account. So in asset side of the balance sheet, there might be goodwill, ADB suspense, and PL account. So if these three things appears in the asset side of the balance sheet, then just get it right off. So you have to write it off. So while writing it off, we have to debit respective partner's capital or current account, and we have to credit the respective item like as goodwill to PL to ADB suspense, and this is always in old ratio. So when goodwill, ADB suspense, and PL account is written off in old ratio, then we have to debit respective partner's capital or current account, and we have to credit the respective item ADB suspense, PL account, or goodwill. But it's better to pass the separate entries for each of them. So there might be the presence of accumulated profit or reserve in the liability section of the balance sheet. There might be general reserve, WCR, workman compensation reserve, investment fluctuation reserve, that is IFR, contingency reserve, PL account credit. So whatever you see in the liability section of the balance sheet, these are termed as accumulated profit or reserve, and this should be transferred among old partners. So we have to debit these all item and we have to credit respective partners capital account. That means in old ratio, to all old partners we have to credit. So these all item will be debited, and respective partners means all old partners account will be credited. So the entry will be general reserve account debit, WCR account debit, IFR account debit, just as whatever reserve that is debit, PL account debit to partners capital or current account, that is in old ratio, that means to old partners. Next one is when assets increase and liability decrease. So for assets increase and liability decrease, we debit asset and we debit liability. Which is decrease, the assets which is increase is debited. So asset account that has increased is to be debit. The liability which is decrease has to be debit, and credit we have to do the revaluation. So that means asset account debit to liabilities account debit to revaluation account. So dear students, next entry will be for assets decrease and liability increase. So For this, we have to debit revaluation account. We have to debit revaluation account. So this means revaluation account debit to asset account, which asset is decreased, and to liability that is increased. So for assets decrease and liability increase, we have to debit revaluation account and we have to credit the respective assets and liabilities account. So there is another entry for bad debt, provision for bad and doubtful debt, and bad debt recover. So this all is concerned with the bad debt, provision for bad debt, and bad debt recover. So I have given the separate entry for each of them. So if there is the presence of the bad debt written off, so means in adjustment, sometimes question might give you bad debt written off this much amount. So for bad debt written off, always pass a entry bad debt account debit to debtors. So this is the entry for bad debt written off. So in case bad debt is there, so bad debt is written off, then we might have to adjust it from PDD. If there is the PDD as a deduction from debtors in the asset side of the balance sheet. So if there is PDD, then just you might have to cut it off. You have to adjust that bad debt amount which is written off from the available PDD. So in case we have to adjust the bad debt from PDD, then PDD account should be debited and bad debt amount will be credited. So the entry for this is PDD account debit to bad debt. PDD mean provision for bad and doubtful debt. So there might be sometimes uncovered amount of bad debt. Suppose provision was 8,000 rupees, but the bad debt is 10,000 rupees. Yeah. So only 8,000 can be covered from the PDD, provision for bad and doubtful debt. So rest 2,000 is remains uncovered. So that is not adjusted through the PDD. So in such a case, we have to transfer it to revaluation account. So in such a case, we have to debit revaluation account and we have to credit bad debt account. So just for the example, we have to write revaluation account debit 2,000 to bad debt 2,000. So next entry is for increase in PDD, there is new provision. Sometimes in case the question gives you the conditions that maintain provision for bad and doubtful debt at the rate 5% or 6% on debtors like this. So that time you have to calculate the new provision at first and just you should compare with the old provision. So in case that is increased, then you have to do revaluation account debit to PDD. And in case it is decreased, for increase in PDD, there is new provision. Just I'm giving here. In case decrease also, in case decrease, then that time you have to pass the reverse entry, that is PDD account debit to revaluation. So be clear, in case PDD increases, then revaluation to PDD. In case PDD decreases, then PDD account debit to revaluation. So I think it is clear to you all. Next one is the bad debt recovery entry. So sometimes the bad debt written off might be recovered. So in case bad debt is recovered, then we have to pass the entry cash or bank account debit to bad debt recover. So at first pass this entry. So I have given here 1 and 2. So at the time of bad debt recover, you have to pass 2 entries. At the time you have to pass the 2 entries. One is for bad debt recover. Next one is for bad debt recover transfer to revaluation account, because this is a gain for us actually. This is a type of casual gain. So we have to transfer it to revaluation account as well. So for bad debt recovered, cash or bank account debit to bad debt recovered account, and for bad debt recovered transferred to revaluation account, then we have to debit bad debt recovered to revaluation. Next one is for any expenses paid. Sometimes we might have to pay certain expenses, so that depends upon the questions. So in such a case, we have to debit revaluation account and we have to credit to cash or bank. If it is paid by the firm, then we have to credit cash or bank. Sometimes partner might pay on behalf of the firm. In such a case, we have to give it to the partner. So that's why we credit respective partners capital account. So that means for any expenses paid, revaluation account debit to cash or bank or to partners capital. That depends upon the questions. Sometimes the question might give you certain liabilities is paid from the firm. So that means whatever the liability is paid, just debit the liability and credit cash or bank account. So For example, there is an outstanding salary of 5,000 which is paid. So that means the entry will be outstanding salary account debit to cash or bank. So sometimes the questions might be providing such kind of information. So in case any liability is paid, then we have to debit respective liabilities account and we have to credit the cash or bank account. So next entry is that in most of the questions, sometimes we have noted some assets is taken over by any partner. So in case for any assets taken over by partner, then we have to debit respective partner's capital or current account debit, and we have to credit the asset account. For example, furniture is taken over by Mr. A. Means suppose Mr. A is a partner. In such a case, we have to debit Mr. A's capital account debit and to what is taken? Furniture. So we have to credit the furniture. So if stock is taken by Mr. B, then we have to debit B's capital and we have to credit stock. So in such a way, we have to pass the entry for assets taken over. So after these all, we have to calculate revaluation profit or loss. So if there is the profit, then we have to pass revaluation account debit to partner's capital or current account. And in case there is a loss, then vice versa, that is partner capital or current account debit to revaluation account. So for revaluation profit or loss, you should do credit minus debit of revaluation. So if credit is more and debit is less, then you will be getting profit, and if debit is more and credit is less, then you'll be getting loss. So as in a working, you can do this. Wherever revaluation is credited, just write it in plus form, and just wherever it is debited, do it minus. So ultimately, whatever the result comes, if positive, that is profit; if negative, that is loss. For profit, revaluation to partner's capital or current account, and for loss, partner's capital or current account debit to revaluation. And be clear, this is always in old ratio. So final entry is that for additional cash brought or withdrawn by partners in capital adjustment case. In capital adjustment case, questions might give you the informations that certain partner has brought this much of cash. Either this much amount of cash has been withdrawn from the business, capital has been withdrawn from the business. So this comes especially in capital adjustment case. So in such a case, if partner has to bring in the form certain amount of cash or check, then we have to debit cash or bank account debit to partner capital. And in case partner withdraws from the business or firm, that time we have to debit respective partner's capital account and we have to credit cash or bank account. So we'll be discussing through the solutions about this in later classes. So finally, now I would like to let you know some information. So in absence of new ratio and nothing information on who has sacrificed. So in certain questions, the questions might give you A has sacrificed this much of share in favor of a new partner, B has sacrificed this much share of in favor of new partner. So if nothing such information is given, or the information how the partner has sacrificed such kind in favor of new partner is not given, and even there is no the presence of a new ratio, in such a case we have to assume old ratio as sacrificing ratio. So be clear, unless nothing information is given about the new ratio, as well as nothing information regarding who has sacrificed to new partner, in which way. So in such a case, we have to assume old ratio as sacrificing ratio. So in most comprehensive questions, if there is no new ratio, then you can assume old ratio as sacrificing ratio. So another thing is that use old ratio in wherever you have to transfer certain things here, like as a loss or profit or loss on evaluation, to transfer accumulated profit, to write it off like as the item goodwill, ADV, suspense, PL accounts. Just you have to go through the old ratio. But only one thing you have to consider over this topic is sacrificing ratio is only used for treatment of premium for goodwill. So hope you all have got this. I think the entries are mostly clear to you all. So in next classes, we will be solving a numerical questions, and we'll let you know in details how to treat, how to prepare various types of ledger, journal entries, and etc. Okay, thank you so much.